When a novice or an average investor wants to pick stocks, what do? They turn to somebody they know has been successful in picking winners themselves. They get a tip, maybe they get some winnings, but they leave it at that. But what's the right, safe and profitable way to pick stocks in the market? Well, most people who've been successful at the game will tell you it's value investing. It's a very broad term, but that's what they will tell you. The aim of this series, and over the next couple of episodes, we will be talking to some of the most prominent and best pickers of stocks in this particular market, and they will tell you how to go about this game. It's not really a game, it's actually a science, and you got to stick with it over a long period of time. The first guest on this show of this series is someone who's called the Warren Buffett of India. He's also, by the way, the Joint Managing Director for Motilal Oswal, and he's Ramdev Agarwal. Mr. Agarwal, thanks very much for your time. I don't know how you feel about that Warren Buffett of India title.
No, I think it's too derogatory on Warren Buffett.
Come on.
You know, I may qualify as a disciple or a student of Warren Buffett style of investing. And,
but when people think about you, they think about value investing. They think about value, how to pick value.
Yeah. So, you know, there are ways, even within value investing, there are many ways of picking stocks, and eventually, say Warren Buffett himself has evolved over, he started picking stocks at the age of 11. That was in 1941 or something. He was born in 1930, and now, he started buying stocks at 11. So,
not everybody can do that.
Yeah, that's also, he started very early. So that's one game.
Yeah.
The first thing is you have to start early in game. Okay. And then you start learning, very quickly start learning. He went to all the public libraries, read almost, he says that in Omaha Public Library, whatever books were there, I think, if I'm not wrong, by the age of 11 or 12, he had read everything. So, you know, that kind of passion and ahead of the time, building yourself up, like Sachin Tendulkar prepared early in the game. Very young age, he prepared himself, he was practicing day and night, he was fanatic about cricket. So like that, that passion has to be brought in picking stocks, understanding stocks. So even his style has evolved. What happened was he was most impacted by Benjamin Graham, whose disciple he was. Sure. He was his prof, and he worked, eventually became friend and professor. So Benjamin Graham is about buying cheap.
Buying cheap, yeah.
Buying cheap and margin of safety. Buy 10 rupee thing for 2 rupees, and it doesn't matter so long as you buy cheap. So that is kind of a speed handicapping, in the sense that you buy cheap and rest all time will take care of itself, because the cheap will become more reasonable or overpriced, and then you can sell the same. So you buy 10 rupee thing for 2 rupees, and as soon as the price goes to 8, 9, 10, and you get out and you make money, move on to the next one.
Yeah.
That was the initial style. Then he met Charlie Munger and all, and over the period of 80s and 90s,
he started talking about the value of the business.
Yeah, the way to make money in stock market is buying good businesses. What is a good business? A terrific business run by terrific management. Now, when you buy a good business, what is a good business? Say like in a bank account you get 10%. There are businesses which earn 50%, 60% per annum. And there are businesses like Nestle and Asian Paints and a whole lot of these multinational companies, Lever and all. They just don't use any capital. So their ROIC and their business is like 1000%, 200% or 150% like that. So they use very little capital, you know. So you have to buy the businesses which are fantastic in quality. First thing. Second is management. So the difference between average management and fantastic management in the same business is not
huge.
50% or one time or two time. It is 100 times or 200. That is the difference between winner and loser. A Federer, you play with Federer, what will happen? You are also a good tennis player, but you know what is one of the outcome. So that's the kind of difference we are talking about. So when the terrific business meets the terrific management,
that's when you create something.
That's where the
really good.
Big wealth creation happens. Like a TCS is made, or a Infosys is made, or so basically it's about finding a terrific management, terrific business. When this combination is there, you have done 90% of the job. Now the next is the valuation. People start with the valuation without knowing the values. So my suggestion and my style is, first I try to understand the value. And if value,
what do you mean understand the value?
Value means what you are buying. See, you have to buy 10 rupee thing for 5 rupees or 4 rupees or whatever. But whether it is worth 10 or not, how do you understand that? So that's the process.
Mr. Agarwal, for our viewers, why don't you actually talk about some specific names where you have invested, you have made money, and use that as a construct for our viewers. How did you come about the idea? What made you sort of investigate that idea a little bit more, and what convinced you finally? And let's start with Eicher Motors actually.
Yeah,
right? Something
so,
that you've already invested in.
I can see newest idea means whether it will work or not, we don't know.
Absolutely,
And
absolutely.
it may not be right for me to kind of
Sure,
talk about something
sure.
which we are buying. So let's look at how we went about Eicher, which is turned out to be one of the very large
Yeah.
successful idea.
Yeah, it's done phenomenally well.
My friend with whom I walk in the morning, he's a telco dealer. He told me that Eicher could be a good idea.
Okay.
So we went and heard the story from his dealership. And there he said that by 2017-18, frugal engineering of Eicher and global technical capability of Volvo, this combination is going to be lethal not only in India but globally, around the world. So, but then it takes time to,
Sure.
first thing is to construct a product like that, slowly roll it out, make it perfect, and then make it acceptable in the market.
Yeah.
Because product is only 10%, 90% sales marketing.
Yeah.
So that
Yeah.
takes time to build up. So, and markets were also slow in last 4-5 years. When we went and kind of visited the factory, we realized that they are out to build a really world-class, very large, ambitious organization. So, I could see that from here, some 5,000-6,000 crores, it could be 50,000 to a lakh crore kind of possibility.